Good morning, everyone, and welcome to the European Crossover webinar. I'm not seeing here that Italian data has come out. German data did come out just now. I'm listening to the squawk right now. They haven't announced anything on Italian industrial orders, but we did get this German GDP. Reuters poll for minus 2.2 came in line at minus 2.2. Flash. Year over year, looking for negative 1.6, came in negative 1.9. Squawk guy even says still waiting for Italian data. So, while we're still waiting for Italian data to come across the wires, let's take a look here. We did get producer prices coming out of Germany, came in down 7/10. CPI out of France came in flat. Still nothing on the wires yet on industrial orders of Italy. And the guy on the squawk hasn't said anything, so I guess they just haven't released it. So I can't say Reuters is slow. Eurozone GDP flash estimate is for quarter over quarter. It's supposed to be negative 3.8. Now that's not going to be to the top of this next hour. Then when we come to the States, we do have New York Fed manufacturing. Poll's going to be negative 63.5, still nothing out of Italy. We do have retail sales also at 8:30 Eastern. I'm in the Central Time Zone, so that's why it says 7:30, but it's going to be 8:30 Eastern. Retail sales looking to be negative or minus 8.6. And at 9:15 is going to be industrial production and capacity utilization, as well as manufacturing output, business inventories at 10 a.m. Eastern, along with job. Oh, wow, Joe's jobs opening. That's odd. I used to see that on a Friday. Usually always falls like on a Tuesday or Wednesday. But anyway, then we do get first read on University of Michigan, looking for 68. Holy smokes, the last one was at 71.8. And that'll be it. And still nothing there. They just came up with the China industrial sales here and industrial orders. Not yet. Oh, I thought they just popped in. They did not. They still, those came in now. Industrial orders negative 26.5% month over month. Industrial sales minus 25.8 month over month. And the guys just on the squawk is just announcing those numbers also. We've seen a pretty good run up here in SPOOs. I actually got a short off in Asia against this 28.54 run here. They actually came down, but it wasn't like they came down a lot. And I didn't even stick around for very long. It was Asia, and I was afraid. My concern was, what if it takes another leg higher? I didn't think so. I mean, if you look in here. There we go. So you can see against this 53, and then they made a quick jump up in here, and we just started fading. But I did not want to stick around very long, because I was thinking we might get something like this and take it. And I thought, I'm not going to have to sit in this thing. Why don't I just wait? But we'd already come so far that I thought we'd have fallen further. I'm quite surprised we didn't at least come down here to like 28.33 or something. Boy, look, we're still pushing up even higher. Probably has a lot to do with as we come in, I think options expiration is supposed to be coming up. But anyway, yes. So that's obviously having its play on this. Let's just go and take a quicker look on this. So looking at the weekly, we certainly have made just a heck of a turnaround yesterday. I mean, I remember talking about 27. It was on I think it was in the chat room 2773. I think it was, but it was off of the right here, the 2-hour chart. You see there, and then we took that dip, and then this market just really turned around and took the heck off. And then came back and then took off again. Then came back, took off again, then came back again. It was just, really a sight to see. Holy smokes. And you can see here in the NASDAQ, strong move also. Look at the dailies. Here's the Russell. And the Dow. 'So we'll see how much further they can make a run up here. It's already been a phenomenal run. Already passed up 50%. Let's see. We could jump all the way up here, and it's already been quite the remarkable move, to say the least. See a lot of volume in here before we made that quick jump. This is reminiscent of what we saw here in Asia. As I told you, we had against this 53, 54, it was 53 right in here, and then all of a sudden, it takes this quick jump. Well, similar, you can see here, and you would expect to see some pretty good volume in here. Point of control. So if you're taking a scalp, probably wouldn't be a bad idea to cover in here into some volume. You can also see, look at the volume in here. See that? It is definitely the point of control. You see here? You can see, look at the amount of volume is the highest amount, hence that being the point of control. You can see here crude oil still moving higher. Holy smokes. Wow, this thing keeps on going higher. Pretty good little run. We're just about up at the 78%. You see that? 2909 would be the 78%. We're almost there. Maybe we'll get a pause here. If you look, you see how they made up to the 61% and they never did pull back to an extent. So yeah, we should see a good reaction here at 2909, the 78%, and you can see also decent little level here, right there. See if we can't get a reaction at 2909. You know, a lot of people have been yakking about gold, so I guess it is kind of sort of breaking out here and here. And you can see just below this point of control, but just right there. I mean, yeah, there's that volume, and there's that volume level I got right there. But it's been such a big run, you would expect some kind of pullback. I mean, once again, I'm surprised that we were not able to pull back to at least into the 30s. You know, I would have expected us to pull back down here, and we're still pretty strong. With that, let's go into the news. Australia daunted by viral doubts, and New Zealand bonds suffer supply shock. Australian New Zealand dollars dipped on Friday amid doubts on how quickly the global economy can recover from the coronavirus, while Kiwi bonds suffered sticker shock at government plans to more than double the debt load. The Aussie eased to 64.58, leaving it with losses of 1.1% of the week so far. For 3 weeks now, it has repeatedly tested resistance in the 65, 50, 70 area and failed to break through, leaving it vulnerable to a retracement to support around 63.75. Kiwi was pinned at 59.97. The RBNZ this week doubled its bond buying program and asked commercial banks to be ready for sub-zero rates by year-end should they prove necessary. Yields on 10 years dived to all-time lows at 0.51, only to reverse sharply to 0.705 on Friday. In all, plan spends around New Zealand 62 billion, or 20% of annual GDP. The government has chosen to go hard and go early in its response, said Westpac's chief economist, Dominic Stevens. On the whole, we think this was the right thing to do and reduce the risk that the COVID-19 causes permanent damage, but being bold is risky. This could saddle future taxpayers with onerous debt, and we expect that the low interest rates will keep the debt burden manageable, but that would change if interest rates rose. Australia has had to borrow massively to fund its stimulus campaign, but so far it's found willing buyers in the market. Record 19 billion sale of 2030 bonds this week drew bids for a huge 53.5 billion, with hedge funds taking a fat slice of the offer. Given the record size of the 2030 line, there's still a little doubt about the market's functioning well, even with the sharp rise in supply, unless the RBA decides to step up its policy action, said in response to the sustained appreciation of the odd, it seemed likely they will keep its bond purchases to a minimum. Dollar set for weekly gains as pandemic recovery hopes waver. The dollar eased from a 3-week high on Friday, but look for set for a modest weekly gain as rising Sino-U.S. tensions amid worries about a second wave of coronavirus infections rattled investors as hopes wavered for a quick global recovery from the pandemic. The trade-sensitive Aussie dollar was poised to snap 5 weeks of gains with a 1% drop. The Kiwi crept off Thursday's 3-week low at 59.58, but was weighed by a talk of negative interest rates. Antipodium pair, like other measures, have struggled for traction in May as investors and authorities weigh optimism about the easing virus containment measures. The market's sort of on a wait-and-see mode, waiting to see, particularly whether U.S.-China trade tensions do escalate. The yen was steady at 7.18. The dollar's up about 0.5% on the week, with risk appetite stretched and price momentum easing. The trading is likely to be entering a choppy period, ANZ analysts said. The gradual reopening of the world's economy comes with a dawning of how deeply the pandemic has damaged supply chains. Data on Friday showed China's April industrial order beating expectations, but consumption was stuck in the doldrums. An already dismal near-term U.S. shock near-term outlook is darkened further in the latest Reuters poll of economists, with a forecast for 30.5% annualized second quarter contraction. And increasing tension between the U.S. and China. The three big risks remain a second wave of coronavirus cases, collateral damage from the shutdowns resulting in delay or very slow recovery, and escalations in U.S.-China tensions. On the latter, the risk will likely be dramatic if Trump's approval rating among collapses, leading him to conclude that he has done nothing to lose by trying to wag the dog. In an interview with Fox, Trump said he was disappointed with China's failure to contain the virus and suggested he could even cut ties. China says it has been transparent, but the yuan is highly sensitive to the relationships between the world's two biggest economies. So there we go. So let's go and move on to the analysis. So the euro tested the weekly level, which was bias chart support at 776, and closed above 8 even. Ahead of key economic data, resistance for Friday will be the 871, in case we get a bounce back in the euro, with support at 754, followed by 756, in case we were 726, if we were to break lower. So I was just thinking, in case we test the stops here. Now, if we get a foothold above 776, then yeah, 776, 26 is going to come quickly into play. But keeping it simple, we'll just move this to 754. But once again, these pairs are all dead in the European session. There's no movement. Typical graveyard trading. So let's just move this in case you decide to test the stops, but we don't really get a real foothold below. Let's go 54. And in case we do get a rally, resistance is going to be 871. Let's move into the cable. Cable challenged level support at 2160 on Thursday. on Friday. I think the low, let me see, at 21.57 or 58. And oh yeah, because they challenged this level right here. Our bias chart remains still for 21.22, but look how they challenged that level right there. We had the level was 60. We got to like I think it's 58, but our support continues to remain 21.22. We have been eyeing that actually for the better part of this week since the beginning, with resistance at 23.30. So resistance support's going to remain the same. We're still eyeing the potential for 21.22. Difference is we're going to be looking at 23.30 for resistance. If we do get that pop, and that even seems a little bit strong to even think at 23.30. I think that'd be like almost pushing the high side. And if we just go with the technicals, it's right there. And let's just call it 22.86. That just seems rich from where we're at, especially when we still think there's a possibility we can dip down here. So let's go with 22.86. In light of the way that the cable continues to move lower, certainly looks it's on track potentially to come down here to this 21.22. See whether or not we get down there today. And onto the Aussie dollar. So the Aussie initially dipped on Thursday, nearly tagging the bias chart support at 63.97. You can see that. As equities were under pressure in the U.S. morning session, but rebounded. Resistance on Friday remains at 64.93. With support at 64.30. So we're really keeping it pretty tight here. And we kept the resistance the same. Let's go into the Kiwi. So the Kiwi dipped past the bias chart support at 59.60 by 5 pips in a tight range before closing just below 60 cents. Support will remain the same with resistance at 60.42. So support's going to remain this 59.60. And we're trading very, very tight. And resistance will be 60.42. Well, both are going to stay the same, so we're going to keep them the same. Let's go on to the dollar CAD. So the dollar CAD gave back a bit on Thursday as expected. Remember we had mentioned about that we had this, it's not really a good hanging man, but we said nonetheless it had rallied. So it wasn't like as if we had gone on a big run up in here. Or like let's say we'd come up and we were really fighting. All we'll do is come off the lows, but it is like a little mini hanging man. So if you remember, we were saying we were expecting a pause. So, and then we said it would be invalidated if we got a close above 41. So a pause we got. So dollar CAD gave back a bit on Thursday as expected. Support and resistance will remain the same. We decided to keep the 40.19 and the 41.43 respectively. Although we had said if it closed above 41 cents, it would invalidate this, but it didn't close above 41 cents. And once again, that opened the door. We were looking for a pause, as we said. And but we haven't come down to the support yet. Got to recognize that we haven't come down there to 40.19. So it's going to remain the same, no changes. And let's go on to the peso. So the dollar peso closed below 24 cents as U.S. equities rallied. Support will be 23.60. What's been the low so far? Looks looks like what 23.74. So support will be 23.60 with resistance at 24.28. Well, it hasn't even poked its head above 24 cents yet, but that will be the resistance. So 24.28. $23.60. And let's go to the dollar yen. So the dollar yen moved higher on Thursday, unable to get past bias chart resistance of 742. Resistance on Friday will be 766. So I was thinking in case equities push higher, maybe we could push a little bit higher and gun some stocks, but we haven't done anything. It's still pretty much dead in the water. With support remaining at 661 in case we really roll downhill. And I thought to myself, that seems a bit of a stretch because I was going to tighten it up. But the dollar yen has, we goosey stops here. I think that I'm a bit surprised considering where SPOOs are that we're not even at least pressing a little bit higher, but we're trading pretty much dead in the water. But after this, there's a potential, and we do have retail sales today, for us to push on either side. So decide to give it that wider range. So once again, resistance is going to be 766. And we're going to keep the support the same, 661. Onto the cash dollar index. So the dollar index continued to push higher, albeit in a tight range. Resistance for Friday will be par 80. We've had that par 80 before, and that's where it come off with that. You see right there at the close here? But so far, nothing. And I wouldn't even call this necessarily a gravestone doji because, we've moved a little bit higher, but I think we're going to be held hostage until we get into this U.S. data. As I mentioned, let's go back to that. So we will have retail sales, which should move the market one way or the other, especially in the dollar yen, I would think. And then later on, we do have, this is still important, but industrial production capacity utilization. But I was going to say also job jolts. I don't think job openings is going to move the market that much. But we do have first look at University of Michigan. So really with retail sales and University of Michigan, we do have the potential for some movers here. So keep that in mind as we go into the U.S. session. So it's going to be par 80 and support's going to be 99.78. I guess this par 52 wasn't bad. The high was par 55, so I guess that wasn't too bad. But anyway, it's going to be par 80. And we're keeping the 99.78. You see that? Let's go on to the cross rates. Well, we did see that move from the prior day, and then yesterday, look how we were just absolutely dead in the water. So I don't see where there'd be any changes here. So this is going to be the same, no changes. High so far has been, we had 64.29 from yesterday, and the high this morning has been, well, we have moved beyond that. Look at this. That has been 64.56. So we have moved higher. I would go, you see the confluence right here, this close, this opened 2 days later. They're almost the same. That would be 64.84. I just don't know whether or not this thing could get up. I tell you what we can do is we can split the difference between these two and go with this high, and that would be 64.77. So we'll move it up to 64.77. And euro yen. We did post a little mini hammer. We're just going to go with the level right here. That's it, plain and simple. So it's going to be 1624. I'm just wondering whether we do make that because these ranges have been so tight. But if they do, going with just the level 1624. Here I don't really have a good feel. We've had a pretty good run. We did back probably almost 50%. You can see where they opened here, and they actually came back to touch that open low. You see the body touch? That's what they did. So we'll just go with that 1530. Not because it's a day low, but because it was that body touch here, and that was actually the low. So we'll go 1530. Oh, not bad. We had 1534, and the low was 1530. So I guess that wasn't bad. Let's move that down. Let's go with Euro wide. This thing is just like, oh my God, look at this thing. It's not even moving. Holy smokes. Well, there's not even any reason to even change it. It's going to remain the same. 66, 96, 68, 60. I mean, the thing is not even moving. Look at that. And that's a daily. Beautiful. Let's go move into the Euro Kiwi. You can see it's pushing a little bit higher. The resistance, you see the body touch there? It just took that out by just maybe about 5 pips, if that much. But that's 81.11. We had 81.44. Let's just go with that 81.11. Body touch. We'll see whether or not they can push higher, but it certainly doesn't look like it that much. On the downside, the body touch there is 79.55, and they almost made it to 79.55, and we had 79.50. We'll just keep that there. So let's go and move on to the Aussie. I mean, it seems like it's very basic analysis. I guess that's why they call it basic technical, but I don't see the point of getting all fancy down on this stuff when you see a lot of these bias charts that point are holding, and we're just going with the levels and the volume, essentially the volume touches. Going on along with all this razzle dazzle stuff when some of these bias chart levels have been pretty doggone close. Let's move on to the Aussie. We did get a little bit of a mini hammer here. How far can they push it up? You can see that the body right here. This one was close. We'll go right there. Well, there you go. You see? Look at that close right there. The open here. And look, that's exactly where they went to. You see that? Now you see what I'm talking about. You see that? I said, well, you know what? Let's just go right there with that one. There's a little bit of confluence right there. And we'll go with that open. 69.56. What was the high today? 69.56. I don't know whether they can push a little bit higher. You see the close right there. We'll give them the benefit of the doubt and call it 69.63. But, I mean, that's the saying. I don't know about going with all this razzle-dazzle stuff when a lot of these pairs just move from level to level. And they just go with the body touches. So we just said we'll kick it up to 69.63. Although right now they're just not even moving very much. I'm just going to go with the level right here, which is 68.68. We actually had 68.55 and the low was 68.54. Well, there you go. Off by 1 pip. We're going to go with the 68.68. Let's go and move on to the guppy. I think we went with the level on this, if I remember correctly. And that's 30.44. No, we went with 29.88. There it is. We went with 29.88. And the low was 30.12. Well, I'm going to stay with that, 29.88. Stay with that. And on the upside, isn't much of an upside. We went with 31.30 and the upside. Yesterday the high was 31.28. Oh yeah, because that's all we did. We just went with the body touch. That's how I guess we came up with that. We got 31.30 and the high was 31.29. We'll move into the 2 hour to see if we see anything a little bit more definitive. Oh, that's when we must have come up with that, because that level right there. I don't know how we came up with 30, but we can see right here it's 31.33. Just going to go with that, 31.33. I don't see this thing turning around and going right back up. You never know. Move it up to 3 pips. And lastly, we'll go to the starting odd. I mean, it sort of doesn't look like any kind of fancy analysis, but you can't quibble with I don't want to say the results, but with just the results just by just going with the plain old levels. This thing has just been dead in the water. Now we can officially say, you know what? End of story on that bullish move. You are now bearish. And support, although the Aussie, you would expect it to weaken, so maybe now we turn it to bearish, we might start to see it move back. But look, we've given it every benefit of the doubt. We did say if it stayed sustained below this level, we could turn it to bearish. And now to flip it back to bullish, you'd have to come way back up. Not that we can't rally. I mean, when the Aussies already had a pretty good run. We're going into some pretty good volume touches right here. You see there? I'll show you. See right there, right there. Here's this low here. You see right there. That coincides with this high. So let's see that. Oh, that is right there. So we'll just move that just a hair lower. This high, that open, and those come pretty close. That is 88.62, and that's actually today's low, 88.62. You see that? This close here opens right there and comes in. So you can see the confluence between these two. I'll show you. See the open here, the close, the body touch, and that shows 88.61, and the low I think is like 88.62 or 88.63. So 88.61. And resistance is going to be right there, that body right there. Right there, which is going to be 90, just a little low right there. Well, 90 even. There you go. That's it. That covers the analysis. We'll just take a quick pop look into the SPOOs. And you can see after that pop, they've come back down here. They're still below the point of control. There we go. You see right there, right, dead center, that's the highest point of the volume. We're rotating a little bit low, just a little bit below this volume level. And we'll see what happens when we move to U.S. session. We're right at the 50% too. This upper zone is 28.86. Let's see if there's anything on the half hour that's a little bit closer. See this close here? Yeah, you see that right there? So there was something there. 60 and a quarter. Call just 28.60, and the market made a run up to 28.63. So 28.60. We're going in. Let's draw this real quick. There. And with that, that'll end the webinar, and we'll see you in the chat room. Thanks for joining us here on the European Crossover webinar.